It'll just take a minute, folks. Okay, let me just post the link and we can start. Here we go. And there we go. Let me just get this thing going here. All right. Brian, good morning. How are you this morning? Hope you are doing well. Assam, Adam, David, Dave, good morning, good morning, good morning. Hope everybody's doing well. Hope everybody's having a good week, and hopefully uh, we can help you from losing money today and tomorrow and the next day. All right, David, Wayne, Doc, we'll be starting in just a minute. I usually take a minute or two, get about 100 people in the room, and then we can start it. Dean, good morning. And again, I apologize for my messy hair. I'm experimenting with washing my hair after the market closes so that I could spend more time with you guys and do my research in the morning. Moondog is in the house. Robert's here. Wardog and Moondog are in the house. We got a double whammy today. Hope you guys are doing good. Jock is here. Robert is here. We got about 60, 70 people in. We'll be starting in just a minute. Good morning, Patrick. Good morning, Jim. Hopefully these sessions are useful, beneficial for you guys, and they help you navigate the market better during the day than you were doing before. I've gotten some really good feedback. And Sergey, good morning. These tough times are when the 2 daily rooms mean so much. Yeah, we've been we took 3 winners from the pit yesterday, didn't we? We took CRM, we took AMT, and we took GE. That's right. Penny, good morning, good morning, good morning, good morning. All right, it's a perfect time to start. You know what's weird? My highlighter's not working. I don't know what's going on. I may have to change my highlighter, but it is what it is. Good morning, Dion. Good morning, Rise. Now today I don't have any webinars that I'm aware of, but I still have my VIP room, and let me give you the link for that right here. Actually, you know what? I think Graham has a class today, and I'll be introducing him. That happens at 1, and here's the VIP room link. Here you go. Here's all the details for you guys. There you go. And that's happening at noon and at 1. Now, I'm wearing a bearish T-shirt today, but I'm actually not nearly as bearish as I may seem today. And I'm going to be exposing a new technique today called the 90-10, and I'll show you how it works. And it's a technique that I like to use when the markets are pulling back a little bit and are ready to climb back up. I'm fairly neutral. I'm not nearly as bearish as I was yesterday or the day before, even though momentum is still favoring the short side. In terms of earnings today, and you guys all have this, I gave this to you. I gave this to you earlier in the week. If you don't have it, I'll go ahead and post it again for you, just in case, because I know we have new people coming in all the time. Good morning, Greg Duzzy. Good morning. Good morning, Whitco. Good morning. All right, so that's that. So you guys have that now. You can look at it. It's in the chat in YouTube. Now, as far as earnings this morning, we've got ABT, we've got First Horizon, we got Prologis, we got Travelers Company, you got USB Bank, and after the close, you've got a lot of companies. I mean, you've got where are we? You got Equifax, you got Discovery, you got CSX, you got Crowdcastle, you got Alcoa, that's a big one. So you got a couple of big companies. So don't think we're out of the woods just yet, especially when I show you momentum levels. But I am encouraged by how I saw the market closing yesterday and by how I saw the market, the inner workings. And I'll explain to you as we go through. So you don't just understand, but you guys get my analysis. By the way, I don't know if Cam is here right now. I didn't see him this morning, but remember to join Customer Service Live. If you have any install customer service questions, they will share their screen. They will talk to you live and be able to help you figure out exactly what's wrong. You could share your computer screen. It's much easier. Good morning, Finn. Good morning, everybody. Dr. Serena, good morning to you as well. So these are the earnings. Be careful, folks. We are in earnings season. And by the way, in my VIP room today, I'm going to do a update and I'll give you the number, the EPS expectations, so we can determine how far we are or how close we are towards those expectations. Delightful Elephant. You got my disclaimer. I like the name Delightful Elephant. All right, all right. So let's continue. So Fed data. We don't have a lot of going on today. We have Fed speakers in the afternoon. The market's going to be able to stand on its own. The big report's going to be the petroleum status, and so far, energies and gold are down, which is actually bullish for the stock market. Here you could see right here, crude oil is down about 0.46. If you look at the trend real quickly, I want to take a look at this. So we are, oops, what am I doing here? You guys can see we're right at the 8-day EMA. We haven't bounced off below or not. So right now, my prognosis on crude oil is not bullish or bearish. It's actually just quite neutral. I do think crude oil is going to start coming up because I don't think this rally in the stock market is as sustainable as a lot of folks believe it is. And I'll show you and explain to you why. That's number one. Number two, um, where is gold? Gold. Metals are also off a little bit today. Oh, there he is. Hey, Cam, good morning to you. I was wondering where you were. Here's June. So you could see the chart. But typically, you have an inverse correlation between metals and energy and the stock market, generally speaking. Although, look at gold. Even though it's down a little bit, it still has a very, very strong uptrend. And as I mentioned, the last time we saw gold gain this much in this much was right before the 2008 crash. So this is not a great sign. What is positive today? We do have a couple of positive signs. The first positive sign is the fact that bond market is grounded. It's a little higher. It stopped going down, and it actually closed higher yesterday. This tells me that in the near term, we're going to have a pullback. Now, remember, pullbacks usually test the area they broke down from, and that's the area right here. So I'm expecting the bond market to rally a little bit and fill this in and possibly start going down some more. All right. Nice. Excellent. Make sure check it out, guys. Look what Cam just wrote in there. Check it out. So again, I'm expecting the bond market to rally. If the bond market can't rally after a drop like this, that's really bad. So the first sign you should be paying attention to today is, how is the long bond rallying? Is it going to be able to hold the rally or is it not? So far overnight, I mean, it rallied yesterday, but since overnight, it's been very choppy. So I want to see it continuing moving higher and come into this range. This will tell us that tech and speculative stocks have a little bit more run up to the upside, could potentially go higher. The other thing that's encouraging me, and I just want to make sure we're all on the same page. When I say I'm getting bullish, I'm talking about today, possibly tomorrow. I'm not talking about the next month. I'm talking about the next couple of days. Okay. So am I overall bullish? No, I'm actually fairly neutral right now. I think we're in a two-sided market, which is really good for me because if we weren't, I wouldn't be able to take yesterday CRM. I wouldn't be able to take AMT. Those are shorts. I haven't been able to take shorts for a long time. I've been really suffering. Now I can take shorts. So I really like that. So this is what you want to pay attention to. This is the VIX. Two things today you want to pay very close attention to. You want to pay attention to the VIX, VIX, or VXX if you're trading on TC2000 without the dollar sign, just right here like this. See VXX. That's you could just do that on TC2000. But either way, you will see how we're coming in. And yesterday, this was the big key, and this is why I went long yesterday. We couldn't break the high yesterday. We couldn't break that big when we went up in volatility. We couldn't wrap it up, and now we're going lower. So if we continue going lower, that's going to be very bullish for the speculative stocks, and that's why I'm expecting a reprieve. But overall, See, we did go higher on the index yesterday, but it doesn't matter because we ended here. So we ended within range, and now we're still going down. So this is what I want you guys to look at. This is the level right here. We want the VIX to go down below 1668, $ VIX. We want it to go below this level. Once the VIX goes below this level, the heightened volatility scenario that we are facing right now will decline substantially. And one thing about the VIX, it rises very fast and it could fall very, very fast. So please, please, please keep your eye on the VIX today. And if you see it continually going lower, especially as the day progresses, especially after the petroleum report, that will be a bullish sign. So you have a couple of things to look at today. You have TLT going higher, preferably. It's not really doing it much right now, but volatility is. So those two things will give you a good indication of where we're at. Ivano, good morning. Let's continue. Let's continue going through our analysis. Momentum level. This is the number of stocks in the NASDAQ that are trading above the 50-day moving average. I don't know if you guys remember, but when we were up here, I told you we're really, really overbought. We need to come off. Well, the NASDAQ 100 is not as overbought anymore. This is why I'm saying we're not really all that bullish anymore or bearish. We're very neutral right now. Only 29% of stocks are trading above the 50-day moving average. That's not bullish at all. Now, let's see how we're looking over here. 50-day, we're not really all that green right here. So we're not really overbought. Matter of fact, we're starting to reach some oversold territory. Let me show you what I mean. That's another reason why I think the market's going to pull up. Let me show you this. No, you're not going to get this from what's his name? Kramer. So you see where we're at right now? Here. 5 years right here. We went all the way up here. We tried to go here. Now we're all the way here now. We're not really all that high. We're not really all that overbought. We'll check in. Yes, perfect, Angie. So you see that? Consumer staples, not really all overbought. There's not a lot of stocks, except for energy. Not a lot of stocks are trading above the 50-day moving average. So right now, the market is not really bullish. Okay, this is not a bullish sign right here. And if you look here, look at the S&P 500 here. S&P 500, only 30% of stocks are trading above the 30% of stocks are trading above the 50-day moving average. So we are not in a bullish cycle right now. And this I actually like. These numbers are not too high, not too low. They're actually fairly good. So as long as these numbers stay above 50%, that two different topics, Tony. You're talking about macro. I'm talking about micro. And right now, people who are here right now, they care about how the market's going to do over the next 48 hours. You're talking about longer term. So in the short term, the market is not overbought anymore at all. It's actually fairly neutral, possibly even a little bit oversold. Now, is that good or bad? Doesn't really mean anything. But look at Russell 2000. Only 24% of stocks are trading above the 50-day moving average. Only 44 are trading above the 200. So the Russell is bearish again. Until we get this number lower, we're going to be technically bearish. But in my opinion, we are still technically strong, but short-term oversold. So I would be expecting a pullback in the market. By the way, NASDAQ 100, only 30% of stocks are above the 50-day moving average, and 63, which is a good number. Let's see if this is on the way down or on the way up. On the way down. Why do I say next couple of days? Now, I know you're all hearing what you want to hear, and you're all thinking, oh, yes, the bad times are behind us. I didn't say that. The good times or bad times will be determined by this. This is what Tony's talking about, the kid getting his bike right here. We're talking about the 50-day. We're talking next couple of days. So am I looking for a little reprieve, a little bounce? I am, because we're getting a little overdone in the short term. But in the long term, look where the bias is. No, you're not going to get this anywhere else on the planet except here from me. So pay attention and pay good attention. Which way are we going? Down. We're not going up. That's the S&P 500 200-day moving average, only 65%, which is still fine. Two-sided market. What about the NASDAQ 100? Let's take a look. Which way is it moving? down, down, not up. So after it comes up here, look at the last 10 years. After it comes up here, what happens? It goes down. But it can happen over a period of 2 years or a period of a year and a half. For example, um, April 2021, March 2022, going down. We're not going up. That's not good. So in the short term, next day or two, trading pit, the shenanigans we do around here, I'm neutral to bullish. Neutral to bullish. I'm expecting a bounce. If we don't get that bounce, we're going to go back down. Um, but in the longer term, things are still, they're not bad, but they're not moving in the right direction. They're moving down, not up. We're not coming off from a crash of the 200-day moving average. We're coming off a peak of the 200-day moving average. So the compass is still moving south, but in the short term, we're a little bit overdone. Now, I wanted to take you inside the market and kind of open up its head and kind of show you where everything is. Does this give you a good idea of where we are, how balanced we are, what perspective we're in? Well, yeah, the Russell 2000 has been really crappy. I mean, when you have this under 50-day, you want to only short this. But look, we're still above for the most part. I mean, utilities are a little overdone. Um, Real estate may be a little bit overdone. But overall, we still have a while to go. We still have a while to go. So again, folks, be very, very careful. Let's go a little closer in. Let's come closer. Let's look at our momentum levels. Remember here, I said we were choppy on the, let's do SPY first. Hopefully this analysis is helpful to you guys. All right. On the S&P 500, we still haven't broken below this level. And what I'm hoping for is here, I'm hoping that we're going to come and test this level today and not break down. Because if we break down below this level, we're screwed. If you look at it intraday, look at yesterday. This is the day before yesterday. This is yesterday. We didn't really break too much below, but we didn't really break much higher. And even right now, this has overnight data. We're still in this range. This is not good. So what I want to see is break above the 506.64 level on the SPY and go up to the 508.54 level. Till we hit the 508.54 level, I'm going to be 65, 70% bearish and about 35% bullish. Now, I'm giving you a really good analysis of where we're at. We're still in the doghouse, but we were able to hold this level and volatility is lower today. See how I'm looking at everything and I'm kind of looking at it like a movie and I'm not just starting from somewhere. I have a place where I'm coming from and where I'm going. And every day we do this, it's like a continued story. And if you miss a day, it's like missing a part of a story. And the story keeps building, and then you know what happens when you watch a story for a while? The actors become so predictable, you can almost figure out what they're going to do next. You guys all know that. You watch movies, you read books. So NASDAQ, look at the NASDAQ. We couldn't even get up to this level. This is why I'm still very concerned, and this is why I'm not hyper bullish and running and going, yay, the bulls are coming in, the bulls are coming in. Because till we get above this level on the QQQ, which is 434, say, nothing good's going to happen. This level has to be breached up. So what does Uncle Roger need to see today to feel warm and fuzzy? I want to see gold stay lower. I want to see energy prices. Let's just go to futures here. I want to see energy prices stay bearish. I want to see the bond market gain up as fast as possible. I want to see volatility go lower. Good, Carlos. I will. I want to see. So you guys understand that? Let me do that again. Okay. I want to see energies go down. I want to see gold go down. I want to see bonds go up, and I want to see volatility go down. And then I want the QQQ to go above the 434 level, and I want the SPY to go above. Now you guys have a little check mark for this morning, and I want the SPY to go above the 508 level. If we just stick around here and nothing happens, the bears will just come back in, and my shirt will have more weight to it. Good, good, Cam. Carlos and Cam seems like a match made in heaven. I'm liking this a lot. I like what I'm seeing here. I'm not even going to talk about the Russell 2000 too much because the Russell 2000, I'm actually thinking of buying the inverse Russell 2000 because it's breaking down so good. And again, could have a little bit of a rally here, but this is too far gone. This is too far gone. The balance is no longer here. You're overbalanced. You're over leveraged to the downside. It's like trying to pick up a 30-pound, 40, 50-pound weight with your arms straight. It'll just pull it down. Whereas if you're here, like right here versus here, it won't go down as much. So it's overweighing us. It's like pushing a body over. I've been watching this Ripley show on, and the guy threw a body over the water on Netflix. Ripley, talented Mr. Ripley. So I was telling my wife, it's like the market. Once it's very hard to throw something out of a boat when half of the body's on this side, but once you get the leverage going, it's easy. Well, the body's over the water now. You understand? All right. So be careful. There's actually, if you don't like to short, there's actually an inverse one. And if this fails and comes back down, we're going to be screwed. So that's the other thing I'm looking for today. I want to see a rally in the Russell 2000. Now, before we get hot and heavy, boy, we're really going deep today. We talked about earnings, we talked about bonds, we talked about levels, we talked about volatility. Good. I'm glad. Few stocks, Tesla. Now, I don't know why folks ask me so much about Tesla. I think we have somebody. I think it's Lance, and he has a service called the Perfect Tesla Trade. But I'll talk about Tesla if you guys want me to do it too. This is the channel. This is the second part of the channel. The channel used to be up here and down here, but the channel now is broken because we can't seem to get it above this level. And I warned everybody, I said, look, if we can't get above this level, we're making lower lows. The odds are we're going to make a lower low and hit this again. Well, we hit this level, and now there's a chance that we can now start coming back up. But I think the high will now be up here. You see that? So kind of coming up and coming down some more. Also, I don't know if this level has been fully vented yet or vetted yet by price action, price discovery. So you notice every time when we stay here, we stay there for more than 1 day, 1 or 2 days, 1 or 2 days, a few days. So it could be the same type of a scenario. But we may get a little bit of a reprieve on Tesla. But I'm telling you right now, Tesla is in a very strong downtrend. And even when he fired a bunch of people yesterday or the day before, I lose track of days, we couldn't get it up. The market couldn't get it up. It broke down, which is right here, this bar. That's a very unusual sign. Stocks usually rally on layoffs. They do. For the old timers here, you guys know that. So again, just be careful. Be careful. Don't try to bottom pick Tesla. The other stock I want to talk about real quick is Apple, because it's one of the biggest stocks. Apple continues breaking down. Now, someone sent me an email saying, "Why didn't you buy Apple here? It's so strong. It's so strong." I basically told the guy he has no idea what he's talking about. And then 2 days later, the Apple broke down. And notice it's right back down here. This is a bad sign. Very, very bad sign. And if we break this level right here on Apple, there's a strong support here. If we break this Apple level on Apple, it's very, very bad. But the fact that we rallied back up to this level and sold off so fast is not a good sign either. So my point is Tesla and Apple, which are two big FANG stocks, are not really doing all that great. Okay. Now let's talk about global economy. Sorry, my highlighter's not working. I tried it again. I don't know what the hell's going on with my highlighter, but it's not working today. Yeah, but I hope let that be the worst thing that happens to me. So we heard about Jerome Powell. It wasn't really impactful. We still have a lot of earnings. We're just getting started. Not yet, Adam. Not yet. Neutral. I'm neutral on stocks right now, and I'm giving you guys exactly. I'm literally giving you exactly what I'm looking at. Okay. We had Live Nation break down. This may be a perfect setup coming up in the next couple of weeks on gap to green, potentially to the upside, potentially. We had Johnson & Johnson sell off. I've been bearish on that stock for a few weeks now. Super Micro surged. I almost got into a spread on that, but it was just too pricey. I didn't want to do it. And United Healthcare advanced. Keep an eye for a breakdown on the stock and a possible gap fill to the downside. Building permits fell to an 8-month low. Not surprising in light of the fact that the kid is hearing mixed signals about whether he's going to get his bike or not. It's actually pretty. I mean, I would be really pissed off. Let me just back up for a little bit. I would be really, really pissed off if I was if I was a home builder right now, because there's consequences to Powell saying things are getting better, we're going to lower rates. These people rely on that. You understand, and they were rallying based on that, and people buy homes based on that, and people refinance their properties based on that. And when you start moving back when you start saying we're done, we're not done, it changes the trajectory of things, and that can put us in a big pickle. And unfortunately, or unfortunately, most of you guys understand that because you're people. You have homes, you have rents, you have mortgages, you have loans, all that stuff. So he said Tuesday that recent inflation data has indicated it will likely take more time for the kid to gain confidence in the daddy's wages to get that stupid bike. I'm paraphrasing. He said if that bike is going to stay as expensive as it is right now, and the price of the bike is not going to go down, the kid may have to wait as long as necessary to get it. Hey, I'm just paraphrasing. Given the strength of the labor market, progress on inflation, it's appropriate to allow restrictive policy to work and let the data involve. Now, is he right? He's 100% right. But could be nice if he said this a few weeks earlier, right, or months earlier. Jefferson stated his anticipation that inflation will continue to cool with interest rates at their current level. However, he noted that persistent price pressures would warrant keeping borrowing costs elevated for an extended period of time. You all know what that means. I'm not going to get into it. But remember, I said the probabilities were at 20%, and I said I would appreciate it if they were more at 12.5%. Well, guess what? They actually moved to 14.9%, and I'm looking for this to get down to about 10, 12%. At that point, I think bonds will be down enough, which is I think we're getting closer, which is one of the reasons I think that this is going to start coming back up in the short term. In the short term, okay? We got earnings on ABT today, which is why be careful. USB, KMI, Las Vegas Sands. Ooh, I didn't know that. CSX, metals, railroads, Las Vegas casinos, banks, healthcare. Very impactful. And remember, they're very essential. They impact other stocks in their sectors. We got crude oil inventories. Be careful of energy prices today. And we have Fed speakers, but they're going to be talking after the market closes. So we have a little time there. Europe is giving us a little tailwind. Yesterday, it did not. They're digesting Eurozone inflation data, positive corporate earnings. Mining stocks, which is not really great, outperformed. That's very defensive. Tech lost ground. That's very defensive. They said Wednesday that their inflation eased to 2.4%. That's good. Really, really good. And I'm hoping Germany can start getting it back together. I would love to go to Germany and buy some property there. China closed sharply higher. This is very good for the U.S. stock market in the short term. After the country's top securities regulators provided clarifications on new stock exchange rules, tech and semiconductors led the gains on Wednesday. That's good for us. That's speculative. That's giving us some tailwind. Yesterday, we had no tailwind. Stocks closed lower, falling below 38,000 for the first time in 2 months as hawkish comment from Powell and tension in the Middle East weighed on sentiment. Finally, we haven't had any tension in the Middle East in the last 24 hours, but that's another unknown and unforeseeability, which would keep volatility up here and energy prices elevated and speculative stocks lower and Russell stocks lower as well. So things are kind of mixed overall right now in terms of sentiment. Watch airline stocks. We may see a little upside today because United Airlines did well. They're very, very essential. Transport services are not that. They kind of do their own thing. Urban Outfitters, another stock which may be. I told you guys yesterday the stock may be perfect for a gap trade. This is another potential candidate that I'm looking at. I'm looking at URBN. I'm looking at Nike. I'm looking at 2 other stocks. I gave them to you yesterday. And again, we have a lot of earnings today. Now, let's talk about stocks that are on my list. All right. Now, I want to show you guys something today. Markets are neutral. They're not as bullish. When markets are backing away, buying breakouts is not always the best idea. The best idea, now, folks, You want to pay attention. I'm going to show you something pretty cool today, okay? I saved this for only when markets are more neutral and I'm pulling back. It's called my super duper whammer, my 90-10 scan. I don't think I've showed you this before. So what is the 90-10 scan? Well, I'm glad you asked. The 90-10, see, whenever you're trading, you got to match the right tool to the market. I trade breakouts. I trade breakouts. I trade option activity. I trade. No, you trade whatever the market needs you to trade. Otherwise, you're an order taker, not a trader. Remember what I just said right now. And you know what the difference between an order taker and a trader is? It's a huge difference. Huge, huge difference. Figure out if you're an order taker or a trader. But if you're a trader, you have a toolbox. And every time the market takes on a different vibe, you bust out the right tool for the toolbox. So let me show you the right tool for the toolbox right now. Roger, why aren't you trading breakouts right now? Well, let me ask you, what breakouts do you want me to trade? There's 2 stocks out of my entire list making 20-week highs. Well, what about 50-day highs? Well, 24-week highs, most of these are gold, 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 inverse Tesla. You like that one? Gold. Uh, let's see, gold. Again, directional inverse Tesla, energy gold. Most of these are energy gold. There's like 2 or 3 stocks here. There's Coupang and Schwab, and both of them are on my list. Can't trade breakouts right now. Exactly, Adam. So what do we do? Well, there's another technique I have. Yes, I don't think I've showed you this one yet. It's called the 90-10. What is the 90-10? Well, I'm glad you asked. You wait for a stock to make a 90-day high, and then you wait for a stock to make a 10-day low. The 10-day low has to be made over a 1-month period of time, so you can't just lag. 90-day high, 10-day low, and then closing at the upper end of the range. Let me show you. Here. Okay. OVV. Here, let me just pull it up here. Well, you're getting more than your money's worth on this class today. Stock makes a 90-day high, and over the next 21 days makes a 10-day low and starts coming back up like this. So look at this scan. Look at all the stocks on the scan. 90-day high, 10-day low, 90-day high, 10-day low, 90-day high, 10-day low, and a close near the high. Why are you trading these instead of breakouts? Because the market's been pulling back the last few days. So what we want to do is we want to find the strongest pullbacks that will start coming back and start creating a new high. It is rocking. 90-10. What does Uncle Roger do? He looks for 90-day highs and 10-day lows. Here's the stock fetcher code. Oh, it's too big. Can't give it to you. It's already in your members area anyway. You're welcome. So yeah, and how many stocks do we have that are fitting the 90-10 profile to the upside today? Let's take a look. 46. Holy moly. I have a hit list today. Now, do we want stocks like this? No. Do we want stocks like this? Maybe. Coming down to the base and are ready to bounce back up. You guys see how I roll? Every market segment has the right strategy to utilize. What about the short side? What about the short side? Nothing changed to the short side. We have tons of breakdowns to the short side, but we have to be a little more delicate to the upside. We don't want to get fall into a false breakout, do we now? Folks, is this helpful to you or not? Tell me if this is helpful to you or not. 90-day high, 10-day low, and the 10-day low closes near the in the upper 75% of the range. That's how we roll around here. Do you have one for the short side? Of course I do. Do we have any stocks that are doing that to the short side? Of course not. Stocks are going down, not up. So we use the 90-10 to the long side, and we use breakdowns to the short side because we have 194 breakdowns to the short side. Is anybody in their wildest dreams ever going to teach you this? No. Why do they have to? They just keep it for themselves. It's the good stuff. All right, let's continue. If you guys want me to talk a little bit more, there's another one called 4x4. I'll talk about that today in the VIP room at noon. You're welcome. Cam, is this good stuff or what? Good stuff, right? More stuff for you to teach in your customer service live. So now let's talk about the stocks that are on my list. Let's go to Roger Demo. Good, good, good. Oh, a lot of yeses. That's good. Oh, this is good. All right, so let's start. I'm going to do the long side first, okay? And obviously, you want to make sure that the RSI is okay and the moving average is okay. But this is perfect. Look, CMI made a 90-day high, made a 10-day price low. This is the lowest price traded in the last 10 days, 2 weeks. And look where it closed, near the high. So now if it starts trading right here, ba-boom, I've got a whammer. See that? CMI. Next one. Good. Good, Rebecca. Look at CMI. I mean, FLS. Made a 90-day high, made a 10-day low, closed near the upper end of the range, right below the 8-day EMA on good volume. If it starts hitting the 8-day EMA, it'll probably at least come up to here, at least to test this area. So when markets are pulling back, now we do have a couple of breakouts. Yes, we have two breakouts. Schwab, wish I bought it yesterday. It looked really good. Like the stock. There's two stocks that are actually breaking out, and that's Schwab and Copang. The rest are all 90-10s. This is also a breakout. The rest are all 90-10s. VLTO. Another one right here. Sorry, the third one. That's the third one. That's the last one. JCI. Yeah, three stocks that are breaking out. The rest are all right here. 10-day high, a 90-day high, 10-day low. Good, Tony. You're the only person who actually teaches a lesson worth learning. Well, I like that. That's very, very nice of you, Tony. Very, very nice of you. All right, let me go back. See that? 90-10s. Don't always look for a breakout. But Roger, you said you should always be looking for breakouts on the scanner. No, I didn't. No, I didn't. Keep an eye on Win because we got the Vegas hotels reporting today. Las Vegas, 90-day high, 10-day low, right above the 200-day moving average. It may test this area right here. That would give you enough upside. Don't buy stocks that are breaking out when the market is not breaking out. Oh, I already gave you this one. I love this one. I love this one. And the higher they hold to the top, the better actually. So don't look for discounts. Sky West. Look at that. This is a beauty. Makes a 90-day high, makes a 10-day low, touches the 50-day moving average, and closes near the high of the day. Make a little highlighter here. I'm really, I should charge you guys money for this class. Seriously. Just gave you guys a really, really good class. 90-10. How do you get the 90-10? It should be in the VIP, in the trading, in the VIP members area. You all have access to that. Again, 90-day high, 10-day low, closing near the high. We want to see it break above the high and start interacting, engaging with the 8-day moving average. That's my last long one. Now let's talk about the short side, okay? Short side, we still got breakdowns. We don't need to do pullbacks because we're not getting pullbacks. We're getting breakdowns. Still got till about the 200. This is the biotech. A lot of stocks in the biotechs are breaking down. I don't want to hear politics, guys. This is not a political trade. This is just, it's breaking the 200-day moving average. And 57% of folks think that if Trump is convicted, including 17% of Republicans, that he shouldn't be president. Again, I couldn't care less. It makes no difference to me. I'm just telling you, it's breaking down below the 200-day moving average. Don't get political with me. I don't want to hear it. I hear it enough from T-Buzz. I'm completely neutral when it comes to politics. I think they're all assholes. Excuse my French. All of them. I think they're all bad. I think they're all bad. They should all be done with. Guild breakdown. Also biotech. No, I just don't have a lot of confidence in the political system right now. That's all. Just Home Depot, be careful and wait for this to break down below the 200-day. There's a good chance this will bounce. FNF, Fidelity. This stock was on my short list about 2 years ago. It was the weakest stock, and it looks like it's breaking down again. I like this short. That's what I just said, Angie. I just don't believe. Yes, that's what I said, William. I said you should start for waiting for the 90-10 to begin engaging above the 8-day EMA. I literally just said that a minute ago. Yes, the answer is yes. Yes. You're right, William. You're right. You know that if they're talking, they're exactly. So don't ask me who I like better, who I hate. I think they all suck. Right here, Rexford Industrial. Right here. Nice breakdown. We may now on these shorts today, folks, we may open a little higher and then slide down. So keep your eye on that volatility. Keep your eye on the VIX and the bond market. Let's continue. Almost done. I am almost done with you guys. Roku, how many times have I given you this stock? And guess what? It's still doing its thing. It's slow, but it's doing its thing. McDonald's, two people asked me about this a few days ago. Below the 8-day EMA, opening up, maybe it'll come back down. Zoom. I really love this company on a personal level. Love this company a lot, but guess two overestimates. Short side right here. And CSX is reporting today. Remember that? And also remember that the 200-day moving average is right here. Let me give you two more short side. Oops, wrong ticker. ZS. Zscaler has been on my short list for a while now. Right here. LH. That's weird. There we go. Now, see this stock, it's already up 2 points and it's been going down. So it'll probably open up a little bit here and then start coming back down. Last one. Last call for the day. Let me take a look at Starbucks real quick. Breakdown here. Let's look at Starbucks. What's going on with my computer? Doesn't want to show Starbucks for some reason. Let's go do this here. Oh, yeah. Starbucks. There's nothing here about threes, just the fact that it's making lower lows. But I think it'll just hit the 8-day EMA right here and then just come right back down. Yeah, I would be shorting Starbucks too. But I don't know about a triple top. Oh, you mean this right here? Yeah, it's just because it's three lower highs. Lower highs. I like lower highs. Doesn't have to be three. I just like lower highs. Lower highs. Lower highs are really good. And then higher highs for the way up and lower highs for the way down. I like to buy off of the highest high and I like to sell off of the lowest high. Yeah. Yeah. All right, folks. Thank you. And thank you again. Before I conclude this class, let me just give you the link one more time. I will be introducing Graham today for a class that he's doing on crypto, I believe. And there's a link for you. If you don't have the 90-10, you can get it from Cam. I'll get it to Cam this morning, or it's in the members area. And I'll ask somebody to I'll ask Brian if he can make a TOS version for it, so you guys have that as well. I hope you guys have a fantastic day. If you have any questions at all that I did not answer, please let me know. But I think today I was extremely thorough, and I think I answered every question. If I didn't answer something, or if there's something else, just please send me an email, roger@rogerscott.com, or go to customer service live at 10 to 1. Cam is going to be there and he'll help you every way. Sorry if I'm a little politically incorrect. I am what I am and I speak freely. I'll see you guys later. Have a nice day. Bye, everyone. Bye, guys.